Hey traders, this is Cousin Vinny on May the 9th at 10:05 p.m. I was just in the chat and going to do a quick video to show you how I use Ichimoku on a trade. We looked at Disney as an earnings momentum trade 2 to 3 weeks out, and what we first looked at was the fact that during this action here we had a bullish Kumo setup with Kumo down below, span A was on top, and for the most part price action was above Tikin and Kijisen. Chiku was as well. Okay, so price being above, Chiku being above price was a bullish thing for us. So what we're looking at in this area here was price action in the Kumo. We were waiting. All right, so right around here on the 25th and 26th, we started looking at this as a possible trade. Okay, we were using options, and Gas and I took the 44s. We were slightly out of the money, the May 44s. So looking at the 24th, 25th, if we break down our chart, we can only go back to 15, I think, because it won't go back far enough, obvious reasons. Okay, so here's the 24th. First thing we were looking at, because we had a TK cross here, on the 24th, we had a signal here to start our position, okay, early in the morning. But I waited and wanted to get a Kumo breakout, okay. We got that. We got this candle here that moved above, and we actually got into this trade and it went against us. But we were above this area here, which was our stop, okay. So here's where we would have entered the trade on the 15-minute. And breaking it down into the 1 and the 5-minute time frames, we would have got a better look at this. We probably got a TK cross early in the morning. Okay, so you could have started early with scaling in like a quarter position and then added on a continuation of momentum on the 15-minute with a Kumo breakout. We did that, and we didn't get stopped out because this is where our stop was, down below the price action here the previous day. So we kept the trade, and we finally got this nice candle breakout, this big candle we added. We were in the half a position at this point. And what I typically do is just start looking at the longer time frames. Okay, I'll go back to the 15. That was on the morning of the 25th. Okay, so we'll look at the 30. The morning of the 25th, we also had a breakout on the 30-minute, Kumo breakout. All right, and we're above Tikin-san, and we held. Notice that we're holding Tikin-san, so that further kept us in the price. Remember, our stop is down here, okay, 2 days prior. So now we have, we're swinging this position because we're taking the earnings run. We're thinking there's going to be momentum. It's the 25th now, and we have a 30-minute Kumo breakout. Now what I typically do is look at the 60-minute. On the 25th, we had a Kumo breakout on the 60 minutes. So those three time frames, 15, 30, and 60, continuously kept showing momentum in this trade. We continue to stay above Tikin-sen. We saw that Chiku was above price. Remember, this candle here is actually, the closing candle here is Chiku back here, 26 periods behind you in the past. Okay, so on this particular trade, we're looking at Kumo in front of us. Okay, so on this particular candle, we were looking at Kumo here, 26 periods and 52 periods forward of price. So we're seeing that this was upsloping. It was giving us an indication that this price could continue to move higher above Tikin-sen, okay, which it did. So once we came up to this area, we started moving our stops up. Okay, here's the 25th. Remember, this is our stop here. Now 2 days later, we moved our stop to here at this Tikin-sen, Kijisen support area. Okay, and we're in the 60-minute. So now looking at the 60-minute, now that we're at the 30th, okay, we look at the daily. We're already in the we've determined that we're going to be in a swing because of the momentum on the 15, 30, and the 60. All right, so now we're looking at the 30th. We're above Kumo here on the daily. Okay, so this is keeping us in the trade. Any dip below wouldn't be a sell signal. because we look at our shorter time frames for that. But by the 30th, we had a nice candle here. We're starting to get overbought. And what I typically do then is look at the regular charts on a daily time frame. Okay. On the 30th, where are we here? That's the 5th. That's the 1st. That's the 30th right there. Okay. So let's draw a horizontal there. It's the 30th. Okay. So, excuse me one second. Okay. So that's the 30th. Now, when stochastics gets overbought, all right, what I look for is potential to embed. Okay, notice that we're above our shorter term period averages and our 20. We're at the upper range of our Bollinger Bands. So this is telling me that this is a solid trade still. And what I'll look at when stochastics embeds, or when stochastic is overbought, to give an indication whether we will embed, is I look at the MACD. And typically, if MACD will cross, okay, notice that the cross is here, okay. We've already got a signal here on the stochastics, and we're starting to move up. But now we get the cross here, and this is keeping us in the trade, okay. See that's right here? We got a cross here now, and we're getting embedded. And what I want to look for is for MACD to continue to point the way. Alright? See how this is continuing the upslope? Okay, we're embedded at this point. So this is telling me the momentum is really increasing now. So we can continue with the trade. So I check back and forth between a regular chart and my Ichimoku. That's the 30th. Now we get this big candle the next day, and I'm looking at, now I'm starting to look for sell signals, okay, on the 30th. And prior to that, I'm starting to look for this kind of condition here where we have a TK cross, okay, to the downside. Alright, I believe we took some off here. We were in full position at this point. And when we got this TK cross, we started to scale out. We were out half, and we were watching this to make sure that on the 15, 30, and 60 again, that we weren't going to sell, okay? And that's what happened. We got this move down. Got a night we were looking for a Kumo bounce, which is what we got. This was all in the chat, so if you want to look at the archive of the chat, you can see where this conversation took place. And with the 30th here, we came down, we held the Kijun, okay, and we stayed in the trade. So that's how I use Ichimoku to stay in a trade. And obviously, I was already out before earnings because I didn't want to take the chance. So we had a nice move up. We were in the money, 44.50, somewhere 44.25, I believe. And this trade netted us upwards of 100 and something percent. I forget what it was. So, alright, so remember to use your stops. This is how I use Ichimoku, and talk to you later. Take care.